Well. Welcome back, everybody. It's another market update with Ken, Heather, and Colin, and it is September 8th. We're wrapping up Q3 of what year are we in? 2025, I think.
Flying by.
Time goes faster and faster and faster as you approach the age of 50 and beyond, even for some of us in the room. And it's been an interesting year of real estate once again. And so we thought being September, like this year's gonna be over with before we know it. So we thought we'd bring you some more interesting stats and data and kind of happenings in the market. And I think the person that has the most interesting stuff to share, well, Heather and I are gonna share some stories after Ken is done. So make sure to stick around for that, because there has been, like, with the rates kind of moving around a little bit and kind of like different economic news, there's been some interesting stuff happening in our line of work. But we wanted to jump right into what's been happening with rates and everything mortgage-wise with Mr. Ken. So let's jump right in there.
You bet. So we have had a nice improvement in rates over the last month. The jobs report that came out in August was not good, and they revised the previous 2 months. And rates improved nicely and have held on pretty much all month with a couple little dips. And then this previous Friday, the September report came out for August, and it was worse than expected as well, with another negative revision. And now the market's actually listening to it, which means before it was shaking it off, and now the market's reacting to it the way we would anticipate, where bonds actually improve, which is what makes rates go down. So I have seen some rates that I haven't seen in a while, since September of 24, actually. So right about a year ago was the last time we were at these levels. And I've had rates in the high fives for government loans, FHA, VA, so 599, 595.
Haven't heard that number 5 in a while.
Low sixes on conforming with a seller credit or a really good file, meaning a big down payment, high credit, things like that. Jumbo is pretty close to 6 now as well. And if we're able to employ other strategies with seller credits for temporary buy downs or permanent buy downs, we're in a territory that we haven't been in a while. So it's nice to see, and I am seeing more activity.
Yeah. So super interesting to me. So we're talking jobs and bonds, whereas like all of our conversation for the past couple of years, has it been a couple of years?
Yes.
Has been like centered around inflation.
Correct.
3 years.
Yes.
And so inflation has just been like sticky. They haven't been able to get it to where they want it to be. And now here we are with inflation still being sticky.
Correct.
And it doesn't matter anymore. Rates are coming down in spite of the inflation. And so
it's true.
And it's just purely due to what Ken is saying here, right? Like, it's poor jobs reports that are actually seem to be like taking hold and driving bonds up.
Correct. I mean, because inflation's still pretty much close to 3%, and they want it close to 2% for the Fed to move and do anything. And it could be tariff related, all these different scenarios potentially. But as you mentioned, bonds are doing well in the face of it, and the economy is still technically growing. So the risk of recession doesn't seem to be as great. It kind of depends who you listen to on the news, that is. But supposedly the economy is still growing at a very slow rate and handling the 3% inflation. So I feel like if that's stabilized, that's how the market's finally reacting.
Okay, so here's my question. This will be a question for Heather here. So if we're still seeing inflation and the rates are coming down, so generally when rates come down, what does that do to home prices?
So most of you out there still have a job, so it's a bummer on the jobs report for people not in that category, but when the majority of the buyers out there can buy and have been waiting for the rates to come down, then the supply and demand ratio is about to change. It is changing. We're already seeing it changing. So with more buyers coming in and making offers finally, then that is going to drive the prices up.
Well, I do agree that the increased demand will continue to push up prices. The national statistic is for every 1% decrease in rates, there's 5 million new qualified buyers. How to break that down to a local, I'm not sure, but just generally when demand exceeds supply, which it has, it's just the demand has been able to be patient and picky. And as that picks up, I've seen multiple offer situations as recent as last week. So I do think prices will continue to climb, maybe not at an accelerated rate, but for a consumer that's in the market to buy, I think time is still the enemy, because if rates get better, fantastic, you refinance. But last September, they didn't get better until just now, so being patient didn't help.
Yeah, just in the last 2 weeks, about 2 weeks, less than 2 weeks, we've experienced 5 multiple offer situations. Much more fun on the seller side of those situations than the buyer.
True.
So Heather and I are going to chat some about some of how those multiple offer situations went down. But Ken, you were saying you saw some of the same thing. But
Yep.
I think one of the other metrics that you can use is new mortgage applications, right?
Yes.
So have you seen any indication that like rising mortgage applications, or is that something that you have?
That is a monthly report, but I'm going to admit it wasn't something that came out last week or scheduled to this week, so
Okay.
I'm not sure of the current numbers.
Okay.
This week, the things that will move the market tomorrow, there's a revision of a jobs report regarding employment and wages, and that's quarterly. If that is negative, that will probably help rates. And then CPI and PPI, which are the two inflation reports, are coming out this week as well, Tuesday and Wednesday.
Okay.
So those could potentially move the market. If they just come in line with expectations, it won't move the market.
Okay. So that'll be something we can check in, and if folks just get back to us, we can let you know if you want to know any more detailed information on stuff like this. Like if we're seeing mortgage applications go way up, that'll be an indicator of, the market's about to start booming again and prices are going to climb even higher. But that's just what you can expect, right? It's like when rates start coming down, like if you're in the market, then make sure you're ready because generally demand starts going up, prices start going up again. So as Ken always likes to say, for most folks in the market, time is the enemy. So when's the best time to buy a house?
5 years ago.
10, 20 years ago, best time. The second best time is right now.
That's right.
100 years ago.
Yeah, that's right. Okay, so Heather,
Best time?
are you interested in telling
No.
our viewers some stories about what we've been seeing in the market?
Okay, story time, excellent. So starting with Alameda. So Alameda is a listing that I have in Traditions. It had been on the market for 235 days.
Oh my gosh.
And when this little flurry of activity started coming back in, we received 3 offers. They all came in the same day. The first buyer was a buyer that had looked at the property in April and kept thinking about it off and on.
Wait, 3 offers in the same day. How many days on the
Same day,
market?
235.
235 days on the market. 3 offers on one day.
Yeah. And then the second buyer was a buyer that had looked at the property about a week prior, but just with the wife, and they were bringing the husband back that very same day. So I messaged her and said, hey, we got an offer. Let me know right away if you guys are interested. And then the third buyer was a buyer that had just happened to also schedule their first showing for that day, sent that same message. All 3 of them wrote. So we're under contract with that listing now.
So
Just
totally
completely wild.
could have been coincidence, right? But like this was also on the same day that we heard the market that rates were coming down.
Yeah,
right?
I think it was the
And then
next
bang.
day. Yeah. Definitely, we saw that flurry of activity happen right away. Okay, so our second story is a new listing, and that listing came about because our clients had a property that they had their eye on that they wanted to purchase. They would need to be contingent, and the realtor let us know that the seller would definitely not look at an offer unless we had their house under contract first. So they scrambled to get their house ready. They worked really fast. It only took a few days for them to get it ready. And their house shows fantastic. It was priced well. And we were able to get it under contract within a matter of, I think, like 5 or 6 days. We had 3 offers come in on that property. And we definitely wouldn't have seen that kind of activity and 3 offers if this had been a couple of months ago.
And there's another story that we can add to this too, because as soon as they got their house on the market, as soon as they got ready, I'm not sure if it was the same day, but they saw a house in Templeton that they wanted to go after that came up on the market on Tadpole. Is that what it was, I think? And they were not able to secure that property because there were like 6 offers on it or something like that. Really, really cool house in Templeton. But it was like, wow, like I haven't seen anything like that. Like just like a big flurry of offers on that one. So there's a whole nother data point right there.
But the house that they really wanted and that they were doing this for was still available. So then we went back and made an offer on that. And now we've just opened escrow, and Ken will be able to lock a better rate for them than what he would have been able to do a couple of months ago also. And our third story, this one's not as exciting for us because we had the buyer and we lost out. And this is a property that had also been on the market for a while, but they had just done a $50,000 price reduction. So based on that price reduction, our clients did decide to go in strong. They offered over asking, but even with that, we still lost out to another buyer. So, and with all of that said, we do still have other listings that continue to rack the days on market up. I have 2 listings that are out at the lake. Those are both sitting with no flurry of activity or offers. The same for my commercial listing in Cambria, our condo here in Paso, and we have a mobile home listing in Atascadero that's also been pretty hard to sell. So most of that flurry of activity that we're seeing and the multiple offers are on those median homes with the 3 beds, 2 baths, show well, priced well.
Yeah, there still are buyers out there that need to buy that are just kind of like hanging out in the sidelines. In fact, the buyer on Cascada actually just told us, it's just like, hey, I was sitting on the sidelines for a long time because the market was moving so fast, and I've just kind of been watching from the sidelines. And then when this came up and the rates came down a little bit, then he was, they were ready to act.
Well, it's like you guys have said many, many times. When you see something go quick compared to sit, what is it? Price right and shows well.
Yeah.
Okay, now it's time to talk about stats. So these are for the August stats, residential SLO County, according to the California Regional MLS. The median sale price is back up into the 9s again. It's sitting right at 910. This has been the second time that we have seen over 900. And second place for the highest month that we have seen, which was March of this year. So we've seen this up and down line moving along for the last 3 years, but this is the second highest so far.
I totally expected prices to come down a little bit again, but here we are.
Okay, next up, months of inventory. Months of inventory remained exactly the same. We're still at 6 months. Median days to sell ticked up slightly, which is 22. We'll probably see those tick back down for the September stats. But keep in mind, this only tracks the homes that actually sold. It doesn't include homes that are sitting on the market and do not close. And it also doesn't include previous listings for that same property where maybe it had sat on the market for a while and then it was relisted. The total number of sales is still low at 243 for the entire county of SLO residential. I would also expect that we're going to see that tick up in September. We definitely have more closings in September in our office than any other month of this year so far.
Oh, wow.
Cool.
And that is all we have for this video. Colin said to say that's all we have for today, but we're happy to still talk your ear off, but we'll let you go on the video and then just call us anytime if you'd like to talk more about rates, mortgages, stats, inventory, or
Even just your family.
go on a skateboard ride with Colin to see a house. Okay, thanks y'all. Bye.